So see, today we will discuss on the financing activities of the cash flow statement. So see, what about financing activities? So first we will discuss that which activities we include, which activities of the business comes under this category, financing activities. And these financing activities we will again classify in two parts. So first part is what? Those financing activities which result cash inflow in the business. And the second part is what? Those financing activities which result cash outflow from the business. So broadly speaking, that in financing activities we include only those activities which help us to arrange finance for the business. To start any business and to run any business, we need finance, and we are to arrange that finance. And whatever activities we perform to arrange that finance, those activities will come under which category? Under financing activities. Now let's see those financing activities which result cash inflow in the business. So the examples of such activities are, so first is what? Issue of shares. Issue of shares for cash. So when you will issue shares to the public, you will get money, isn't it? And that money you can utilize in order to run the business. So issue of shares for cash means you are getting some funds for the business. So that's why it is financing activities which result cash inflow in the business. Yeah, and the second one is what? Issue of debentures for cash. So debentures is just like a certificate. Okay, na? Certificate issued to the public for against the loan taken from the public. It is just one form of loan. Okay, debentures means loan actually. Loan taken from the public, and against that loan we gave certificates to the public, and such certificates are known as what? Debentures. So if it means we are issuing debentures for cash. It means we are giving debentures to the public, and against those debentures we are getting money. So this is one type of loan. Okay. So again we are getting money. So this is financing activities which result cash inflow in the business. So when you will issue shares, when you will issue debentures, you will get fund from the public, and that fund you can utilize it for any purpose of the business. Normally whatever fund we get from issue of shares, from issue of debentures, that fund we utilize for long term purpose, for buying fixed assets for the business, for any to accomplish any project which we have planned out, which we have decided. Yeah, and the third is what? Receiving long term loans. Sometimes we feel that whatever fund we got from issue of shares, whatever fund we got from issue of debentures, that fund is not sufficient. So in that case we have to go for this, the third option. So in that case we take loan from the bank or any financial institution. So receiving a long term loan from any bank or any financial institution will also come in this category. So all these three activities will result cash inflow in the business. All these, due to these three activities, a fund will be raised from the market for the business. Now let's discuss those financing activities which result cash outflow from the business. Now see, the first is what? Redemption of preference shares or debentures. Redemption means paying back the money. When you issue shares, when you issue debentures, you are getting money, but those preference shares and debentures are for certain period, and after that certain period we are to repay the money back to the preference shareholder and to the debenture holders. And that refund, that repayment of money is called what? Redemption of preference shares and debentures. And repayment of loan is also what? Cash outflow. If when you will repay the loan, there will be cash outflow from the business. So see, repayment, payment of dividend. Dividend is what? Dividend is a payment which we are to make to the shareholders at the end of each financial year. we issue ordinary shares, we issue preference shares, and the person to whom we issue these shares, those persons are known as what? Shareholders. They invested their savings in our shares, so they expect something from us. So at the end of the year, what we will do? Out of profits, we will issue some of the profits to them, and that share of profits is called what? Dividends. Suppose my earning is 10,000, and out of this 10,000, 2,000 I distributed among the shareholders, and rest 8,000 I kept with the organization. Getting my point? So 2,000 I distributed among the shareholders. And why I am distributing this 2,000 among the shareholders? Because they invested their savings in our shares. And the motive is what? Why they invested, why they purchased my shares? So that at the end of the year they could get dividends from the company. So that's why here what company is doing? Company earned suppose 10,000, and out of 10,000 company distributed to the $2,000 to the shareholders, and that distribution is known as what? Dividends. Yeah, so that is when we will pay the dividend, then again there will be cash outflow from the business. So these are the financing activities which result cash outflow from the business. These three activities which will result what? Cash inflow in the business, and these three activities which will result cash outflow from the business.